Okay, well, good afternoon, everyone. Welcome to Latino Venture Investing, a virtual fireside chat. My name is Rodrigo Sierra. I am a proud Alumni Society member, Northwestern University grad, and joined today by two folks who I am super happy to have with us, Adela Cepeda and David Olivencia, the two co-founders of Angeles Investors. I've known Adela for, gosh, Adela, I was trying to figure out earlier today, like how long have I known Adela? I think 25 years,
Wow.
actually. I've known David for a lot less, only about five, I think, since I joined Angeles Investors, and you as the CEO of Angeles Investors. But Adela, let's get started. Instead of me reading a big old long bio, you both have long bios, very actually really beautiful bios. Adela, I think when I first met you, and I want to say this because both your connections to Angeles and your co-founding of Angeles. But when I met you, it was through the Chicago Community Trust, where you were one of the co-founders of Nuestro Futuro. And I bring that up to say that you have always been a supporter of the Latino community, of Latinos, of the Latino efforts, of everything Latino-ness. And Nuestro Futuro was your way, along with some other founding members, of bringing together Latinos who could do so, who had the means to do so, to create a fund to support nonprofits who were supporting the Latino community. And now with Angeles Investors, it's similar, but it's Latino investors who can do so, who are interested in supporting Latino entrepreneurs who then can create the next cycle of wealth to continue to support our community and our businesses and our people and the things we love. So, with that as a little bit of background just to your and my relationship, I wonder if you'd give us a thumbnail sketch, Adela, of your really stellar career. You've done a ton, both professionally and personally, and I've also served on different boards, government boards with you. But give us a thumbnail sketch of Adela's career and where you are now.
Yeah, thanks so much. It's such an honor to be here with you and David. And um, since this is the Alumni Society, which I just love and have tried to participate in so many of their activities over the years, uh, talk a little bit about the academics. So I do come from Harvard. I studied economics as an undergrad there. I'm an immigrant from Colombia, but was accepted to Harvard. I was living in New York and then met my husband there who had relationships, family ties to Chicago, strong political connections. And I came here thinking that, very quickly he would see the light and we'd go back to the East Coast. Actually, Chicago is a fabulous place to have a professional career because it's very tied to the civic. Top CEOs here are engaged in the community.
Yeah.
And for as long as I've been active in the community, and I would say that I came here in 81, so early 80s, they seek out inclusion and diversity in the civic activities. So nobody really wanted to have a board without some diverse representation, even if it was token. There was still an opportunity for you to have a place in a very important civic board if you had that interest. That's
Yeah.
how I became, and the community trust is the community foundation for Chicago. That's how I was invited to join. We had Latinos on the board. I'm not the first by any means. There were Latinos for years there. But I noticed that there wasn't enough going to Latino need, which is so great, having an immigrant community, a young community. And so we did start Nuestro Futuro to raise money targeting the Latino community. That's a bit of the background, but then it's not enough. It's not enough. And coming from the financial services, understanding the importance of investments, what I realized is where we fall short is we don't have enough assets. We don't have enough financial firepower. So, having met David and both of us very committed to this mission of helping to close the wealth gap that Latinos face, not just in Chicago, but nationally. We have really worked very hard then to build Angeles Investors, and I'll let David take it from there.
Yeah, please, David, go ahead.
Well, thank you, Rodrigo, and the team from Alumni Society for putting this together. My quick thumbnail and background, senior technology executive, multiple Fortune 100 companies, Oracle, Verizon, Accenture, Ford Motor Company. I get an MBA at Notre Dame, which is the Alumni Society. We call it the Ivy League of the Midwest. um, yeah, you let me. And fell in love with startups. I mean, you get the business competency that an MBA gives you, and then I fell in love with the startup world. Being a tech executive, I saw the disruption taking place. Throughout my career, very involved in a lot of nonprofits, some very business focused, a lot very Latino focused, whether it was Nashimba, the Congressional Hispanic Leadership Institute. I was a co-founder of this organization called High Tech, which is now it's one of the leading technology leadership organizations in the world. And I was traveling around, and I wanted to, and I'm doing the startup thing, and I'm really loving it. And this was through Notre Dame, a group of Notre Dame called the Irish Angels, and I was just wanted to get back to Chicago because I was living in New Jersey at the time. I reached out to a mutual friend of Adela and mine, and I said, "Hey, I'm coming back to Chicago. I got a pretty good network, but who do I need to get connected with in Chicago?" And she said, "Oh, you got to connect with Adela." So I ended up connecting with Adela. My wife's from Colombia, Adela's from Colombia. We have a lot of the same views as it relates to our community, wealth, investing, and we hit it off. And then we got a group together that was very much venture focused. You had Samara Mejia, who was just getting ready to start her venture fund, Emma Rodriguez Ayala, and both are Alumni Society members, by the way, was a lawyer. We had some of the tech leaders that I had met through High Tech, and we all came together and said, "Hey, we believe there's something in here where we could put an organization together to find, fund, and grow the most promising Hispanic and Latino ventures nationally," right? So we thought, hey, there is a funding gap that our founders are often overlooked, and we can solve that gap. But more importantly, right, we believe that we got some phenomenal founders and we can make some pretty good money, right? We believe they're entrepreneurial, they're innovative, they're hardworking, they're efficient. Or say we are, right? And we believe we can make a great, not only help, but also make a great return on investment. I serve on two boards. One is a regional bank, Wintrust. The second is a family-owned company called Schurz that has a broadband properties as well as a cloud business. And I'm an author of a book, Networking Excellence, and I did a session on that with the Alumni Society a year ago. And that's a little bit, wife, 3 kids, dog, live on the southeast side of Chicago.
Terrific. Thank you for that. Adela, of course, you had your own financial services firm for many years, served on the board of financial service organizations, served on other for-profit boards, served on lots of nonprofit boards. So as you think about how you and David came together to create Angeles Investors, do you think of Angeles Investors beyond what David just said, which is, help Latino entrepreneurs, help them launch their businesses, help them move their businesses forward, make some money maybe? Do you also think of that as sort of non-direct board members, like advisors to these organizations? Or how else can you help these organizations beyond just the financial piece?
Oh, totally. First of all, I want to say that while David and I, initially worked on this idea, we have 50 founding members, and Rodrigo, you're one of those. So one of the things that I learned at the community trust and when building Nuestro Futuro is it can't be yours. It's got to be an idea that everybody can have a part in. And Angeles Investors is very much that. You can contribute. The key is, financially. But if you want to be involved in finding the startups, you can participate in that. If you want to be involved in helping to grow them, there's a constant list of requests that they have. And if you can help them, help them. That is a key contributing factor to the success of Angeles investors and why startups seek us out as well. They know that we can quickly give them access to, potential accounts and high-level professionals that can help them focus the business. So absolutely, if we can negotiate advisory members, full board members, as we've done in Canela Media, any significant role that we think will be enhancing to the startup and to the career of our members. I give a lot of advice on that. Yes, I've served on corporate boards since, let's just say over 20 years for sure. And having that experience and knowing that a lot of the members of the Alumni Society are curious about that, want to be a part, want to be considered, aspire to that, as we all should, depending on where our career has taken us. Why shouldn't we also have a seat at that table if we have reached the C-suite? It's a normal succession. But often we don't have the network to introduce us. So this is all a part of that ecosystem, but starting at the very beginning, right? Because what we find is, as entrepreneurial as Latinos are, we do not have the ammunition to build lasting, scalable businesses. Because what's needed for that? Capital. And that's where Angeles Investors comes in, trying to help close that initial gap.
Yeah, and David, thank you for that, Adela. And I love the "It Can't Be Yours" piece. That's really, I think, the magic of so much of, to me, what being a part of Angeles Investors has meant, is that we come together as a group. And we can get more into this, and we hold these quarterly sessions where people come and pitch. We just had one in Miami. They're a lot of fun. It's exciting. You meet new people from all sorts of different businesses and backgrounds and parts of the country and parts of the world. So it's just really an enriching environment to be in, that's very inspiring. And so I love that piece of it. It can't be yours. David, when you think about, so, you've been involved with this, you mentioned the Irish Angels, and other entities like that. But for folks who maybe are on this session who haven't dipped their toe in this world yet, can you start to break down what does it truly mean? What role does it play in shaping the future of the businesses and innovation? How should people think if they're thinking about kind of getting involved in this space, what it takes, what it means for them, what their first step might be besides reaching out to Angeles investors, those sorts of things?
Yeah, it's a great question, Rodrigo. I think if you take a step back and you think about, call it wealth creation or asset allocation, right? If you look at the wealthy in the country, right? They've got some in stocks, they have some in bonds, they have some in real estate. But the ultra wealthy have, I don't know, I think it's 20-30% and kind of call it private equity. And within there's about a lot of different asset classes that you can go. But then there's this venture asset class. And I think the number is roughly 5 to 10% of what the wealthy or the ultra wealthy have is in this space called venture. Definitely private equity, it's roughly 20%, but venture is roughly the 5%. You can chat GPT and get the exact number, but that's roughly what it is. And so so one should look at it as a diversification of your wealth portfolio over time. If you want to be there, then you should say, hey, okay, well, I want to start understanding this private equity space and then this venture space. What's cool about the venture space, and I'm like way over allocated in venture and in private equity, is unlike a stock that you buy, there's no way, it's very hard to connect regularly with the CEO, find out what's going on, really get in, use your network and influence that, and have fun along the way as they're succeeding.
Yeah.
But as you go farther down and within venture or startup investing, there's even different areas within there. There's like pre-seed, which is just starting out, seed where they have a little bit of revenue traction, Series A where they've got about 1 million to 5 million or so in revenue, and then there's Series B, C, D, et cetera, that kind of get them growing up to a more mature company, right? We tend to play more in the seed space. We do a little bit of the other ones. We tend to be in the seed space. This asset class, it's a high risk, high reward asset class, unlike the other ones, right? So you'll invest in 10 companies, 3 or 4 may not make it, 3 or 4 will do good, and then 3 or 4 will do great, and two or three do great, and they make up the whole returns. And this asset class, and you can do the research, if you do it in a well-diversified portfolio with due diligence, all that stuff, can gain a roughly 26-27% IRR average. We believe with our networks, with the experiences that we have, with the leadership that we have, we believe in our community and the strength of we believe we can do better than average. And so far, we'll see. We're proving it out, but we're still early. We're 5 years into it. So that's Rodrigo, a little bit about the asset class, how we look at it, and it's a lot of fun. You're in there, you're watching these startups grow, hit milestones, break into new accounts, win awards. We've had a couple Entrepreneur of the Year awards that they win. It's celebrate their success. It's a ton of fun.
Yeah, for sure. And Adela, what do you think about in terms of people who are thinking about maybe pursuing this journey? What should their mindset be? What skills maybe should they have or think about? What financial position do they need to be in to think about pursuing this type of a
Well,
investment?
thank you. Well, remember, to be an Angeles investing member, you must be an accredited investor. And there are certain specific parameters of financial stability that you must have in order to be able to invest in these kinds of opportunities. Like, I think minimum income is 200,000. You have to have over 1 million in assets, not counting your home. There are, and these are sometimes changing. There's been a big movement to democratize this. But for those reasons, we have typically been excluded. And it's a network, right? And so, but it is, the place where you can make extraordinary returns. Because if risk is rewarded, then this is a risky place. And what do you need to be to invest once you are an accredited investor? You have to have a very substantial due diligence. And that's one of the things that Angeles Investor does. So we scan, I think it's minimally 100 opportunities monthly to bring to the membership the best 3 or 4. The selection committee only gets about 10 of the 300 we might have gone through before bringing those 3 or 4 to the full group. So already there's been a layer of due diligence, making sure this is real. If there are already revenues, verifying that, all the work that I think it would be very difficult to do on your own. So we do that. The other thing we enable you to do, if you are interested in venture capital and think that you are lacking that asset class in your portfolio, you see, a lot of us have significant savings, be it in retirement funds or other funds. And when you look at it, once you're an accredited investor, why shouldn't you have some exposure to venture? It's almost prudent if you want to try to keep up with the returns. And so once you're at that point that you recognize that this is an opportunity, most of the time these opportunities don't come your way. So we are out there hunting these opportunities for you. And the reason that they're not usually available for you is that the startups want 100 to 200 to 300,000 minimal investment. Well, that's why it's been an opportunity for the very elite that can invest at that level. We break it down so that you can put minimal 5, 10. We put together the 100 to 200 to 300 package and are able to make the investment. So we're giving you access to something that, frankly, unless you're in that network, you're not going to have.
Yeah.
You're not going to get it.
Yeah, for sure. I agree. And that's one of the things I think that's a hurdle that I think it's very helpful to be a member of a group like Angeles Investors, to your exact point, because even if you may have 100,000 to write a check, you may not want to write that check all and risk it all in one place. At Angeles, you can be part of a group and, like you said, write a check for $5,000, still be invested in a company, watch it grow, maybe have some potential earnings down the line, but be able to get, parse it out that way, which makes it very sort of not, I don't want to say easy, but easier to step into this space in a way that can become more realistic for more people in our community, I think for sure. David, Adela talked about the due diligence that Angeles does, and I know you do a lot of it of each of these companies before, as she said, they ever even get to the point of bringing before the full group to consider investing in. What should individuals be thinking about their own due diligence if they're thinking of investing in something that an Angeles brings forward for consideration?
Yeah, so I've invested in about 80 startups. I have a portfolio of 80, roughly 80 startups. And if you want to get into this asset class, that you could, I mean, we're one angel group. There's hundreds of angel groups out there. Our focus is around Latino ventures, right? Seed stage, but there's funds that are angel groups that are focused in the West Coast and tech and women's and all that. So it just depends if you want to get in, there's a lot of different ways. If from Angeles and kind of what we look at and how we due diligence, right? Or what I would recommend as you're looking is do it as a group. I've done it in the investments individually, as kind of Adela mentioned, and I like I like doing it. I've learned that it's better in a team sport. If I can't convince 3 or 4, 5, 6 of my friends to invest in something, it's probably not a good investment, right? So you do it as a group because you diligence it as a group.
Yeah.
You fund it as a group. You help it grow as a group, and when they win, and not all of them win, right? Again, high risk, high reward. But when they win, you celebrate as a group. And that just makes it so much fun. And then you kind of you redo it. So I like to look at I call it time. It's an acronym that helps me remember because sometimes I forget. So for the T's, I like to see traction. I like to see revenue traction, month over month growth. So in a startup, I like the terms. What's the valuation that I'm investing at? I like the TAM, which is the total addressable market. Is this a big market that they're going to bust into and disrupt? And then the team. So those are all the T's. The I that I like to see and we like to see is who else is investing. Pretty smart investor. I've done a lot of them. Have some good ones and I've had some ones that have failed and I learned a lot from the failed ones. But who else is investing in the deal? Who are the co-investors? Because I like smart investors to come along with me with us. So that's the I in time. The M is the moat or the business model. What's the competitive moat? What gives them an advantage that gives them some defense in their startup? And then the E is energy and excitement, because startups are hard. They're very hard. They're extremely hard. There's ups, downs, ins, out. So they're very hard. And so does this startup founder have the E, the energy, the excitement that's going to endure all of that, those ups and downs and a lot of downs? The other thing about time is I look at how the founder spends their time. If I see them on social media posting about political events and other things that have nothing to do with their business, it's a warning sign for me. And in general, what we'll do diligence on. But then the other thing about time is it's the time value of money. I've got opportunity costs of where I can put money. So how is the velocity of my money going to work in this investment versus something else, right? And so that's how we have structured a bit of our due diligence, and found it, and that's through lots of learning, lots of mistakes, right, as well, to help us do that. And that's packaged in the diligence documents that we give to our members.
Yeah, and to either one of you, success stories are motivating, and so when one goes, it makes you really happy and you may energize you. But there's also cautionary tales. You mentioned risk a number of times, Adela, you mentioned risk. So what are some of the common pitfalls or challenges that investors in this space should be aware of before diving in?
Well, competition is a common one, right? So you think you have come up with the strategy, but then there's someone large out there with a lot more resources that can come in and wipe out what you're planning to do. Technology is another factor that has to be well diligenced, because as much as you might see the opportunity, somebody can come in with a better technological approach that will make this startup go nowhere. Um, and then sometimes it's just there are great ideas out there, but execution is a whole different thing. And so having a team that has prior experience, that understands the industry, these are all the things we look for. And, consistently, the winners have that. I would say those are real attributes to look for.
Yeah, I would say I would plus one all of those. The interesting thing is it's a bit of, you got to make sure that they have the product market fit, right? And then the traction is going, but it's also like watching cash, right? It's always this game of raising money, working to grow scale, hoping you do. And if you don't, then it's like how many more months do you have, of life as a startup? And when should you be thinking about raising, the next round, and positioning yourself to raise? And oftentimes you'll see startups, they're very proud, and then they'll want to say things are going bad, and there's 3 months, 2 months of runway, and then they start, hey, I need to raise, and it's too late, and then they end up not making it. So it's a bit of, all those components together: the right team, the right leadership, growth, getting traction. But the one of the things is keeping an eye on the cash. What's going on with cash, or even when they raise a round, how much cash do they have, and what are the milestones that they're going to do, to make sure that they're using that cash efficiently.
Yeah, and you mentioned you've been doing this for a while and a number of different investments. So yeah, I'm sure there are some success stories, but what have you learned from the ones that haven't been so successful? Are there lessons to be taken from the ones that don't quite go as planned, either as an investor and as well as the entrepreneur?
Yeah, one is the cash thing. I've seen cases where even they've even thought and they planned, and they had an investor that was, that they were doing diligence, and they felt real comfortable that they were going to give them $2 million for a round, and little by little their cash is going out, and like a month or two before they're getting ready to close with this investor, the investor pulls out, then they're scrambling, they're not able to get it, and then they shut down. So that's one. I don't get enthralled with celebrity investors. There's a couple deals that I've been on that there's been celebrities, and I was oohed and ahhed, and I said, "Oh, the celebrity's investing. Oh, it's got to be great." Didn't quite work out that way. And then people invest at different stages, right? I've learned that I like to see, me personally, right, and somewhat on this, because we look at all stages, but I like to see revenue traction and unit economics, and how are things growing, and how are the numbers working, and do some deep studying. So those are some of the things that I guess I like to see, and because I've invested in startups that were pre-revenue, and they stayed pre-revenue till they no longer were
Long
around.
time.
Exactly, too long, and they didn't make it. And look, and it's I laugh, and you lose money, and our minimum check sizes are 5,000. We have Some people have written checks for as much as 150,000 individuals into deals, right? So we're not talking, this material money. And then on the other side, you have some that are do really well, right? So yeah.
Sure. Adela, lessons that you've taken from on your path and your journey?
From those that fail is that naivete about fundraising.
Mm.
So that's kind of what David is pointing to, where you think the money's going to come in, but you don't have a backup plan. You don't have a few prospective investors you're talking to. You just are believing that, and these are expensive investments. So people change their mind. They're always evaluating one investment against the other. So unless you have it in writing, you don't have it. That's a big factor. But the other, to me, it's execution. It's not having that experience in that market to know how it works. And I've seen it, ideas that replicate something that succeeds. The difference is the experience of the founder or the founder team in executing and generating revenue, which is just key. The days of generating hits, I would say, is somewhat. It's today. It's important to have a clear path to revenue building, and you have to be able to assess whether that's going to happen, and cut it off if it's not going. Limit your investment, and that's why you have to start a small amount at a time because it's like stocks too. You fall in love with them, but they can go a lot of different ways, and you have to be able to sell, or in this case, get out or not reinvest, or because we don't have liquidity here for a long time, and that's a big factor that people have to understand. This portion of your portfolio, if you need it tomorrow, you can't have it. It's invested in companies that do not trade for the most part.
Yeah.
They come to a point where you might be able to get some liquidity. It's not the max valuation. You get max valuation in a public scenario.
Sure. You have to know when not to put good money after bad, as my father used to say.
Yeah.
Well, we're 5 years into the Angeles journey. Just celebrated at the Miami event, the 5-year anniversary. Grown from 50, I think you said, were the first founding members of Adela, to now over 500 members of Angeles Investors. Congratulations to both of you and to
Thank
the
you.
team who have made that happen. That's just incredible. What makes you most optimistic about the potential going forward?
The enthusiasm to have 500 paying members that are also committed to investing, to learning this segment of the investment spectrum, and to helping us find and build these incredible companies. I mean, every day I'm energized by this. It's just such an incredible commitment of people. We hold the 4 pitch sessions around the country, and people come from all over the country to participate. It's an incredible group of people in terms of the level of professional success that many of our members have achieved, all of them, I would say. And it's just such a learning opportunity, both from learning from the startup, which it exposes you to incredible technology and processes and things you wouldn't otherwise know about, to actually your fellow members who are amazing. And so, no, that gives me hope that we are going to close this wealth gap, which really limits the opportunities for Latinos.
David?
Yeah, no, I'm very excited about the future. I mean, we are just really warming up. If you think about just the amazing network we have, 500 diverse leaders across the country. You think about the learning, right? Just the world's changing rapidly, a lot of tech. This is a great environment to learn, increase your business competency. So and innovation competency. I get more excited every time I see these amazing startups, how they're looking to conquer and disrupt various industries, and I admire them, that's only increasing. And then I love that we've placed 4 of our members on boards. I think we're going to be able to place another 40 over the next 5-10 years on board. So very excited about that. And I'd say the last thing is I'm the most excited about our community. Right? We're $3 trillion economic powerhouse, right? 20 to 30% growing to be the population of voting bloc. That's very powerful, right? So we've got a youth in this country that's growing, connections across the Americas. I think we are in the best position for our mission and vision to not only help the gap that Adela mentioned, but also create a great return with tremendous upside. So very excited about that.
Yeah, terrific. All right, we have some questions coming in from the audience, so I'm just going to start asking them of you both. The first one is, how can Latino entrepreneurs better navigate these ecosystems? And what role does representation within VC firms play in shifting the landscape?
Well, venture capital is where new industries are created. It's where exponential wealth is created. So having access to it is critical for our community. Having such a young population that is increasingly well educated creates a fertile environment for entrepreneurship to emerge and succeed if the capital is there. So those elements join to create opportunity for this community and society. I think I would say that. But David?
Yeah, no, I would agree, Adela. The one thing I would say is, look, it's rough. Our entrepreneurs are getting roughly 2% of all venture funding, right? And that's, we're talking hundreds of billions of gap that they should be getting within our community a year. Look, and you can complain, and that's not going to move the needle at all. We're not complainers. We're taking action. And I believe that if you look at our community across the country, right, if we were to invest at just a reasonable amount, we would take that gap from 2% to get it to roughly 10, 15, almost to parity. If our community, we can depend on everybody else, but if our community were just to invest, those accredited investors within our community were to invest, we can make the change ourselves, right, without depending upon anybody else. We just got to take action. So that's how what I would say.
Yeah, I love that. Be proactive, take active, get engaged, be a part of the solution. You the next question kind of leads into what you said, where we're only getting 2% of investment. Why do you think that is? Why are investors slow to recognize the potential of Latino-led businesses? How can founders better position themselves to attract institutional capital?
It's lack of exposure. A lot of these investors are in isolated areas where they don't see enough of us in a position to play at the highest levels. That's not, it's an innate bias that has created a veil of invisibility around us. So we're not seen as those players that can execute on a corporate strategy and build a company. But regardless of where you are and what your orientation is, our community is so large. It is so inherently entrepreneurial. There is no doubt we are going to be those players. So what we're doing at Angeles is being ahead, trying to catch up, and trying to give these incredible founders the opportunity to emerge. Once you have, a few more incredible success stories, it's going to turn heads. And we're seeing that already.
Momentum shift.
Yeah, I would say, Rodrigo, it's kind of interesting when you look at the venture capital, landscape. I think the rough numbers is still, you look at all venture capital firm, I think there's like maybe, I don't even think it's 2%. I think 1% are Latinos. So there's very small people who are cutting checks. Like Adela and I, we also have a fund, general partners. So there's like dozens, like not that many general, like you can almost count them on a couple of hands, right? And so that doesn't help, right? The second thing that doesn't help, I mean, venture capitals, they're always looking at risk, right? So you put 10 and you put 10 startups in front of them, and they're going to say, well, where are the risk factors, right? And then they're just maybe maybe they didn't go to an Ivy League school, maybe they have an accent that they don't maybe communicate quite right? And consciously or subconsciously, maybe they see that and they pass because of the risk factor. That I think we've seen that in a lot of in some cases, right? Or they may not understand the market quite, right? We had, Canela Media as an example. She was pitching, kind of the Netflix for the Latino market in the US all the way to Latin America. Venture capital firms didn't quite, she got told no like 200 times, right? So I think there's a little bit of that. Too, I mean, look, on the women's side, it's even more. I mean, Adela is a general partner. I think female general partners, it's even worse. I mean, there's very few. So again, you can complain or you can take action. And we're saying, I don't have time to complain anymore. Like, we got to take action. And so that's what we're doing, and that's what excites us.
Yeah, as a follow-on to that, another question in the chat is what systemic changes, whether that be in VC policy, corporate partnerships, do you think are necessary to help more Latino-led startups grow into real leaders in their industries?
Well, one of those key changes is exposure, right? So at Angeles Investors, every quarter we have, I don't know, 8 to 12 interns. And I'm talking about across the spectrum. They could be college students, and many of them are MBA students.
Yeah.
And what they get working with us is exposure to the nitty-gritty of investing. So they can leave here with a description of what they did. Due diligence. Wow. Due diligence. Yeah. My job was to write up, 10 of these a week. We're giving them an experience that they wouldn't otherwise have. And we are seeing that be a successful strategy. So many of our interns have gone on to positions in this industry that, they're going to make a difference there. Not just for themselves, but they're going to have an open mind when we bring them some ideas and to co-invest. And these are call them kids. They're grown adults, but that we coached and prepared and opened the door for them. So that's one key way. The same way we're opening the door for our members to see great opportunities. So I'm optimistic.
Yeah, that's really terrific. We should be optimistic. Do you think that the shift, how can we shift the narrative so that investing in Latino entrepreneurs is seen as a competitive advantage rather than just a diversity initiative?
Go ahead, David, because I can talk about this.
No, I mean, I think there's you gotta there's success stories, and we're building more and more of them, right? So I think we need to continue to highlight and amplify the success stories that are in our community. And I don't want to say rub it in the face of those who passed on these, but I want to say rub it in the face of those who passed on these great investments. So there's a bit of that, right? I think it's amplifying the amazing successes of our community. I think it kind of goes to the earlier question. I think you got to educate the call it the accredited investors within our community about this asset class. I mean, look, it's new. I mean, I've been doing it a while, but I think I've been doing it longer than most people in our community in general. And I think the startups were relatively new. I mean, we're very entrepreneurial, but the businesses that are venture and scale, it's a different game of the mentality about taking in capital, scaling and growing, right? That's not, that's not a lot of in our DNA in the businesses and in the communities that we had. And then this whole competency and conversations around startups and value creation and investor. It's like a whole, many of us grew up in very humble households, right? I always say this story, when I just found out maybe 7, 8 years ago, really what a family office was. I say, I didn't, when I was younger growing up, when I was told about a family office, that's where I went when I got into trouble, was the family office. And now you got these amazing organizations called family offices that really power a lot of the investing world that's out there. So that's my take.
Yeah. Adela, you mentioned internships, and I think that's really a vital piece of it, right? Because we're kind of creating this flywheel effect. So we bring them in, they learn, they get all these great things that they can add to their own VCs and resumes, and hopefully that gets them in the door of places where maybe they wouldn't have gotten in the door before because they've done this work. Likewise, are there opportunities for people who want to pursue careers in this, like at places like Angeles Investors? And what kind of pathways into that are the
Well,
right things, the right
we're
back?
a 501c6, so we don't accumulate a lot, and we're positioning for another sector to be 501c3. So we don't yet have that creation of opportunities for our members, but I think that when we have 5,000 members, that's going to be very different. And, given our population size, that's not unreal. That's
Yeah.
palpable.
Yeah.
There is a strategy to get to that. And at that point, this will offer opportunities for others to join and be compensated, if that's what you mean.
Yeah.
But the young people that we are mentoring, they are going to careers full time in this area. They leave us and get a full time job, as one of them as a VP at and remember, Carlos, he was one of our first most devoted members, had a full time job, worked here to help us fashion this, and now he's a VP at Hyde Park Ventures. It's real.
Yeah, it is real for sure. Well, we are kind of coming toward the end. We have a few minutes left, but let me just let you both offer some tips for people who want to dive deeper, they want to learn more. David, you talked about your own book. Are there must-read books? What key networks? Again, yeah, Angeles, of course, but are there others? Educational resources? Where should aspiring Latino investors who are interested in this type of investing be looking for that type of background and education and learning?
Well, I'm going to be, you know, self-interested in this. I don't see anybody else doing the angel investing concept the way we do it. In terms of being open to anybody can be a member, by the way. You don't have to be Latino to be a member.
Yeah.
Opening the gateway to learning, to associating with the founders. We create an environment where you can learn at your own pace, right? I mean, you're with other people. So maybe it's intimidating to talk to David, who has 80 venture capital investments, but there's a whole bunch of other members that are somewhere between 0 and 80, and you can talk and explore, the language and how do you do it and how did you decide. This is how so many of us learn. And
Yeah.
so I'm thrilled about those opportunities that we provide all across the country to do that. And I think that's a fairly unique way and less intimidating way to understand the opportunities in this investment sector.
David?
Yeah, so I would say that as an alumni society member, right, you went to a world-class school, you've got a world-class education within the alumni society network, amazing network within your university, amazing network. I would encourage you, I'm on two boards. A lot of the reason why I'm on two corporate boards was connections through my university. So great networks. I would, encourage you to continue to leverage and connect within those networks. Adela was in my book and I interviewed Adela. Adela's, I think, part of 7 or 8 different paid networks, right? And so you have your choice of different paid networks that you can be a part of. I'm probably part of 6 or 7 paid networks. Angeles is one of them. And within that network, it's, you get access to great leaders, you get access to great deals, you get access to great learning. And, there's potential board opportunity. I mean, Adele and I get board opportunities, job opportunities come to us all the time. Where do we go first? Where do we think of first? Analyst members. The analyst members are first. And so you want to think about networks that align with your heart, with your passion, where you're going to have fun, that you want to be a part of. And so I think roughly of our 500 members, I want to say roughly 20% are alumni society members. And we'd like to continue to grow that, right? I know all the 3 of us are, and there's more. So
yeah, for sure. Favorite podcast?
There's this one called Exponential Growth. Actually, one just dropped today with Adela. And then books. You mentioned books. There's Jason Calacanis wrote a book, Angel. How I took $100,000 and made it, I don't know, $10 million or something like that. It's a phenomenal book on angel investing that I remember, that I've read, and it's great. I highly recommend that one.
Yeah, terrific.
I want to touch on what David said about networking. In the field of finance, you don't open the paper and there's an ad saying, hey, there's this great startup happening in Silicon Valley or wherever, or in Chicago. It doesn't happen that way.
Yeah.
So much of finance, both the investing opportunities, but the career opportunities too. You have to be a part of a network to understand what the path is. And many times, all of us in Alumni Society are the first or one of a few. There might be a whole cadre of us in a large company, but in our distinct areas, we're the only one. So how do you figure it out? It's through network. That's why I belong to so many. In order to build my business, it wasn't the kind of thing I could put an ad and say, oh, here I am, I'm the best financial advisor for municipalities. No, I had to go to all kinds of activities, meet with people here, and this is the same here. And so it's very important to be connected in order to find the opportunities and to build your network that's going to support you as you establish your path to success in your industry.
That's a great way to close, Adela. And let me just say to both of you, thank you very much. I feel so lucky to be connected to each one of you. I feel lucky to be connected to the Alumni Society and all the people that come through the Alumni Society, another incredible network of folks. And Alumni Society pitch call out to the June session that'll happen in Chicago for the next big summit. That's coming up. For those of you who are listening and want to listen again, there'll be a recording that's sent out to all the members. And for those who couldn't make it, they can access that recording. But let me thank the Alumni Society for their support in making this happen and putting it together. And again, thank you, Adela, for your friendship, for being a part of this. David, for your friendship and for being a part of this. Look forward to more great conversations and lots of great success going forward for Angeles investors and for each one of us individually and together.
Thank you, and love what Pedro has done with the Alumni Society.
Oh, yeah, Pedro's a star. Thanks, everybody. Take care.